Welcome to SME IPO. We have management of Bombay Matrix Supply Chain Sri Hitesh Shah ji, which is launching its IPO from September 30 to October 4 at the price of rupees 93 for gross proceeds of 4.29. So welcome sir in SME IPO channel. It would be great if you can tell something about your company business model.
Yeah, so we are a supply chain management company based in India, promoting Make in India products for global markets. We sell and we ship, we manage the supply chain, the quality aspects for lighting industry, for agriculture, for industrial, and for automotive markets in US, Mexico, and Europe.
Sir, like what is the major use of proceeds for this IPO where you put this money?
Yeah, so we're growing very fast in India. All the proceeds are going to be used in mostly working capital, and including a lot of new hires and new positions and new jobs.
So, sir, like I have looking about your like top line, it is growing amazingly like for past few years. Bottom
Yeah.
line, last year there was like slightly dip. Can you tell the reason for this?
Yeah, last year was, the issue was multiple fold. One was our sales were lower than expected. Even using the top line was good, we were expecting more, but because of the COVID shutdowns and lockdowns, we had to move. Our customers ended up buying a lot of their products from North American sources or from China sources. So we lost some sales. Number one. Number two, our raw material costs were very, very high to support our suppliers. We gave them significant increases in raw material. As well as all the shipping cost and disruptions related to everything. So, and one last thing I guess I would add is we added a lot of new positions preparing for the growth for this year, next year, and a couple of years out. So we built a lot of a stronger team all over India, Pune, Delhi, Indore, all over South in Chennai, Bangalore, and everywhere else. So we added a lot of people in addition to all the additional one-time costs related to COVID lockdowns and shutdowns.
So, like, are you expecting next 5 year growth would be in same line which you are growing at like past year, or like it will stabilize with higher base?
Well, we're not, I mean, our focus is on continuing our journey of promoting from India, make in India for global markets. And, the runway for this business is very, very large. So, we could do this for years and maybe a couple of decades. So it's really based on how much we can execute, and our focus is on making sure that our people are aligned, our sales positions and teams are aligned, our strategy is right, and we're executing perfectly. So yeah, we absolutely, it is to prepare for growth, and that's what we're doing. So
Thank you, sir. And sir, who are the major competitor in your space?
yeah, so most of our customers end up being our competitors. So our customers can easily do what we do. Number two is a lot of our suppliers can also do what we do. So the issue happens is that it's not a win-win solution. So you can imagine larger companies like Siemens and Emerson and Schneider Electric and Eaton and those, they don't want to work with smaller suppliers all over the supply. In fact, everybody has a strategic requirement of reducing the supply base. So we basically help consolidate supply base. We take over supply chains. We help them manage their warehousing to be within all of their plants all over the world, using our partners and warehouse suppliers everywhere. So as a result, we just all customers are suppliers, all of our competitors basically. That's our biggest chunk of that. Our suppliers can easily do what we do, but then they're getting paid in 4 months. They have to hold inventory in North America. They have to hold inventory in Europe. Very difficult to do.
Sir, and sir, like, can you tell about your journey, like how you started the organization and like what's growth year down the lines?
Yeah, so we registered our business almost a decade ago in India with the intention of basically supporting making in India and shipping it. At early years, it was very difficult to source from India. The costing wasn't competitive, the capacity wasn't easily available, the suppliers are very inflexible, And over the last decade, we've seen a lot of growth. And what has happened, what Bombay Metrics has really benefited from is the relationships of US and China getting strained has been a big impetus for Bombay Metrics to source from India. A lot of customers have basically said, we want to move to India and so forth. So we've benefited greatly in that regards over the last, I would say, especially 4 years. We've built out our team a lot more across all parts of India. We have about 35, 40 suppliers that we do business with about another 100 in the pipeline. So it's been, the 10-year journey, but really in the last 3 years is when, since the tariffs hit in US and the COVID and the straining relationships between China and US has been, good tailwinds for us.
Everyone is talking about like China plus one strategy, and like have heard news about this. So, but like in practical way, you are seeing things happening in ground, and customer are looking about like diversifying their suppliers from China plus other countries, and India is getting this.
Yeah, absolutely. I think India and Vietnam have been the two biggest beneficiaries of moving out of China. Fortunately or unfortunately, many of the Vietnamese suppliers actually end up being Chinese suppliers. So they're just so you kind of link to that India. So India provides you with a very clear demarcation in terms of very independent. Where the countries are now getting more aligned across their defense, across their political systems, across their economics. The new announcement about the military reorganizing by Prime Minister Modi aligns really well with the Australia, UK, US military strategy. So India has been a big beneficiary over the last 3 years, thanks to Mr. Modi's efforts and other things coming together, where we feel like it's going to be really good, tailwinds for us to get new business, good new opportunities, and keep growing.
Due to like huge liquidity, the private valuation of company is very high. So like, have you thought of getting some kind of private funding, or like what's the reason of launching IPO so soon?
Yeah, that's a good question. So we did it for multiple reasons. One is we our job is to attract suppliers as much as it is to attract customers. So IPO and things gives us a good credibility with the supply base that we are trying to go for. And there was zero reason for us to go with private equity ownership. We get approached by private equities all the time, very regularly. Once a week we get emails from doing different things, but it did make sense to us to be able to have somebody that actually tries to control what we do. We feel like going out to our close friends and family and some of the individual investors allows us to be very independent in executing the business strategy. We are a very long-term management team, so with a long-term focus. So this really allows us to basically do the business the way we want to do, just get them additional capital so that we can continue to invest.
It's really nice talking to you. Any special message for your shareholder why they should invest in your company?
Well, so number one is, I want to let anybody that invests in our business is that it's a huge responsibility that we take. We've never taken anybody's money in the past. We feel like the business opportunities are right after having grown the business for 15 years. So our destinies are tied. Whatever is going to happen to us will happen to our shareholders. And so that's really the biggest message, that our future is tied, our businesses are tied, and we're going to continue to look after their funds like as if it's our own.
It's really nice talking to you, sir, and like wish you all the best for your IPO, and
Thank
see you
you.
soon moving to like from SME to main board. Wish you all the best, sir.
Yeah, absolutely. Thanks a lot, Sanfu. Thanks for
Th-
having me. Take
Thank
care.
you, sir.